OptiFuel will have ongoing capital needs as we grow, but most of these, the refueling infrastructure, production facilities, capital equipment, most can be financed through traditional methods of financing. So for purposes of answering this question, I'll focus on near-term scenarios where raising additional equity capital beyond the initial $40 million could be needed or strategically advantageous. First, pre-building locomotive modules. Additional capital could allow us to pre-build power and fuel modules for our switcher locomotives 6 to 12 months in advance. This type of proactive approach would enable us to assemble and deliver switchers much faster than our competitors during the next 3 years when competition is at its highest. Also, we could use it for operating overhead for faster growth. If there's accelerated demand for switchers or other growth scenarios, this could drive our operating overhead requirements beyond our current budget projections for 2025 to 2027. So as we roll out our production and service divisions, additional near-term capital would enable us to de-risk our growth by strengthening procurement and logistics, advancing the integration of OEM systems for managing the parts, the repairs, the maintenance services, and really just give us a longer runway to build efficiencies into our call center operations and any service technician networks in that side of the operations. We could also utilize more than $40 million for acquiring a production facility. If you think about our Lego-like approach to manufacturing, we don't require a massive complex plant, but if we could acquire a production or an assembly facility that offers significant tax advantages, such as through our Opportunity Zone status, or delivers operational efficiencies, I would think it could add considerable real estate value at a fraction of traditional costs. And finally, pursuing strategic partnerships. If a joint venture or partnership opportunity arises that significantly enhances our overall value proposition, additional capital could be deployed to pursue that opportunity aggressively. We could also potentially see a scenario where we may raise money to advance on an opportunity in a new market. So while our current projections focus exclusively on locomotive sales, additional capital could be strategically deployed to accelerate growth within that sector, improve operational efficiencies, and also to unlock new revenue streams. Each of these scenarios represents a very calculated opportunity to add strategic value for our investors, and we'd consider multiple funding avenues for any endeavor, from reinvesting profits and securing grants to bank loans or additional equity.